Hi, everyone. Welcome to the Timing Research web show for April 6, 2015. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be talking about the 80th weekly report. If you haven't had a chance to look at this yet, just go to TimingResearch.com/reports, and you can download this or any past reports there. I have Dave Landry guest hosting for me again this week, so I'm going to go ahead and turn it over to him.
Okay, thank you, Dave Kosmeter, and thank you to Timing Research for having me back once again. Looks like we got a full lineup today. We have Anka Metcalf of TradeOutLoud.com. Anka, tell us a little bit about yourself, your trading, and a little bit about TradeOutLoud.com.
Hi, Dave. This is my first time here, and so I'm very excited to join you guys. And I'm actually a professional independent trader. I've been a professional independent trader for about 11 years, and I do come from a background of investment banking for more than a decade. I've been around hedge funds. I've been trading for a very, very long time. You know, kind of about 11 years ago, something clicked, and I just wanted to do it, you know, just for my trading account and focus 100% on my trading. So, you know, besides swing trading, because I was mostly a swing trader and an investor, I started, you know, to day trade, and I've been doing that very actively for about 9 years, 10 years now, and more and more I'm trying to retire from day trading, and I'm just, you know, embracing swing trading for the lifestyle, and it gives me, you know, more time, you know, for myself. I do come from Europe, so most of you guys here might notice a little bit of an accent, and I am certified from numerous financial institutions throughout Europe and U.S., and I also run a managed accounts program for a group of high net worth clients. I run my own hedge fund as well, and I'm also running a swing trading alert system where I carbon copy all the trades basically that I'm taking in my fund for you know, for my subscribers. I also run, I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm. It's located in Detroit, Michigan. We do a lot of live webinars here throughout U.S. as well as in Europe, and also we do host a lot of online events from time to time. We teach day trading, so we do have a wide array of courses that we offer to students, such as you know, learn how to day trade, learn how to invest, learn how to trade stocks, futures, commodities. I'm also myself a commodity stock trader as well as forex trader. I'm also the designer of a proprietary trading system that is based on price support resistance, correlated with trigger times, of course, in sync chart correlation, and a strict set of trading rules. I'm very proud to say that you know, I had really, really good mentors, and I am very, very fortunate to have made it in the market very, very, you know, without, you know, cutting the learning curve. So I think it's really very important to have somebody that, you know, can guide you along the way.
Amen. Amen. It sounds like you're giving a little back with the website there. Well, you sound pretty busy. Let's go over to Sean. Sean's a friend of the show. Sean, tell us a little bit about your trading. Tell us about yourself, and tell us a little bit about 360wallstreet.com. .com.
Well, I've been trading for 20 years, 10, 12 years, basically full-time. That's all I do. Over that time, I've had multiple different websites. You know, as my trading evolves, so does the education and the products that we offer. But kind of like with Anka, I like to swing trade, but I use options. Anyone can go onto the website 360wallstreet.com. On the blog, you know, we try to give general market direction with some few stock picks with options. We also have a day trading system. The day trading systems are really strictly for futures. We stay away from day trading stocks. I did that for many years, but the individual stocks are a little bit more volatile. The indexes seem to obey more systematic rules as far as programming and stuff like that because you're trading the average. Other than that, we have stock swing trading, future swing trading, day trading. So I trade options, futures, and yeah, that's about it.
Cool. All right, next up we have Thomas DeLello, did I say that correctly? Of orderflowedge.com.
Hey, Dave. Yeah, close enough. DeLello.
Close enough.
DeLello. How you doing today? Thanks a lot for having me on the show. Pleasure to be here.
Have you.
Great. Well, I'm someone who has a deep passion for what I do in life. Really, two main passions: trading. Been in the markets for about 19 years now. And my family. I have 4 kids ranging in age from 26 all the way down to 4 years old. So,
oh my goodness.
I sit to say, yeah, they keep me plenty busy. I got a lot going on. So I started trading in the mid-'90s where, I was calling my orders directly into the floor, mostly the S&Ps into the pit, because at that time, 95, 96, of course, there was no dome, there was no electronic trading for retail traders. So probably about 2 years or so before the E-minis came out. So been around the block a few times, and I'll spare you all the gory details, but suffice it to say it took me quite a while to develop my methodology, which is centered around order flow principles. I started teaching probably about 5-6 years ago, more by accident than by plan. I had more and more trader buddies asking me to help them, to train them, to teach them what I was looking at. First with one-on-one mentoring, and then, one thing kind of led to another, and because of positive feedback from people that I worked with, one thing led to another, and we started a website like I said, probably about 5 years ago, which led into group workshops and then progressed into a daily trade room. So, everything comes down to, for us, the basic ideas of order flow and tape rating, order flow dynamics. And these dynamics that we speak about, supply and demand, we talk a lot about the smart money running stops. These dynamics, they've been around forever. Wyckoff, Livermore, same thing 100 years ago. They all spoke of the smart money and the composite operator and how they accumulated inventory at new lows and then pushed the market up to hit stops so they could distribute into the stops at higher prices. It's the same deal today, same concept. Only today it's more about the algos and the HFTs who, they lock onto the stops, they push the market hard one way, they hit the stops, they take it right back the other direction. So it's the same basic story, but the main difference is the speed and the frequency, really, in which the stops get hit. So, my opinion is the main challenge these days in becoming a successful trader is to understand the actions and strategies that the HFTs and smart money traders, successful traders employ, and how they differ from those of unsuccessful traders, and try and emulate what they're doing as closely as you can. And that boils down to trading in the direction they're trading in the areas that they're trading in, and basically using order flow information to confirm their activity.
Cool. Yeah, you answered one of my secondary questions. I was going to ask you about has that changed over the years, and it hasn't, but the way it gets executed does. That's fascinating.
Yeah, absolutely.
I've got some of those older time books here, and I'm actually been collecting a few lately, going back to the 30s and picking up first editions of some of these books, and it's kind of been fun. But yeah, I'm looking forward to reading and rereading some of those things. And human nature, it never changes.
It never changes.
You're always going to have that smart crowd out there trying to take advantage of the masses, which is kind of fascinating. Cool.
Yeah.
Very interesting. Okay, Anka, let's go to you for the question 2 this week. Based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower this week? And that's the close of April 10th. And then once you give us the answer, go ahead and rank your answer, your confidence on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Okay, so I'm bullish at nature. Okay, so I love to trade long positions. I am actually an 8 to a 9 bullish, and I think the market will head higher. We have been in a very, very strong uptrend, and I have been making a lot of money in long positions over the last 3 years now. And one thing that I can see on charts is that all the dips have been bought, and again, I totally agree with Thomas what he said earlier. And these high frequency trading computers, black boxes, gray boxes, whatever they're out, and the fact that volatility increases, over time. And actually, we're going to run pretty close very, very soon. I do have some information that we're going to run into. So the general volume of the market is going to be created by these high-frequency trading computers, and they're going to approach close to 90%. So rather than trying to alleviate and trying to swim, we're trying to swim with them rather than against them. And one thing that I have learned over the last 3 years is that you really need to have a flexible stop and not have a hard stop in place, especially if you're a swing trader.
Yeah, so I agree. Yeah, and I think you have a brain in your head, you might as well use it. We got stopped out of a position mechanically at like $9 a share, and I told everyone, look, it's getting kind of close to stop. Feel free to give a little discretion. And then it turned around and went straight back up, and that happens quite often. And then I get asked, well, why didn't you set the stop at $8.99? And it's like, no, nobody's that good. Use a little discretion. Use your brains. So good stuff.
Absolutely, okay, you have to give a little bit of wiggle room in each and every single trade, and you have to be very aware of what the market is doing. Look at the symmetry on the charts, look at the patterns, and make your, kind of take a retained decision based on multiple support levels if you're in a long position, So. And again, I'm a very technical trader, again, I look at all the external factors as well, so I'm not ignoring fundamentals. And also, I trade with the technicals being, of course, on my side, but I do pay attention to news as well. This week we're having, and I think my attention is going to go now towards Wednesday when we have the FOMC meeting minutes that are going to come out at 2 p.m. Eastern, and then we're going to read through some clues. Maybe there's going to be some stuff that was not communicated at the press conference. So that's really going to be a glimpse into what's going to happen until the next FOMC meeting probably. But I'm bullish. Other than that, 8 to 9, bullish.
All right. Well, I'll put you down as a 9. How's that?
Oh, okay. That sounds perfect.
All right. All right,
strong
Sean.
Support area here in the S&P. Very, very strong support area. Actually, I have a chart of the SPYs right in front of me, and I did call actually a lot of long trades on that weak market last week. I'm long IWM, long Halliburton, long RAD, TOL, JNS, WBA. So WHR actually triggered today. So I do have 7 trades that triggered long today as well.
Yeah, I'm pretty excited about that IWM too. We'll talk about that when it's my turn. Not that they ever respect my turn anyway, but Sean, let's go to you. You know the routine. Based on any technical fundamental indicators you want to use, would you predict that the S&P index will move higher or lower this week? That's a close of April 10th. And then once you do that, rate your confidence to that question on a scale of 0 to 10, with 0 being no confident and 10 being extremely confident. And let me just say something before I forget. The confidence scale, a 0 would mean you're 50-50, and a 10 would mean you're 100% sure. So a 0 doesn't mean you have no confidence. It means you're 50-50. So that's a little confusion there. But anyway, go ahead, Sean.
So every time I've been on this show for the past year, I basically say the same thing, which is I'm still bullish. I'm 100% technical trader. I almost look at the news like you want to do the exact opposite of what you feel like the news is trying to tell you.
Amen.
So I'm looking at 2130 as the upper target on the S&Ps.
Yeah.
My confidence level, 8.5, probably. And like I said the last couple times, as long as the S&P stays above 2,000, you have to be a buyer of every dip. Long term, I think it was 3 or 4 years ago, I did a 3-hour webinar. I think the Dow was about 10,500 at that point, and we had a 21,000 target on the Dow, and that target is still there. So all the symmetry, all the duplication of the patterns, I think what's getting people in trouble is they're looking too much at a daily chart over the last couple of years, and really the monthly chart is really the chart that's in play. So, you know, you can say, oh, well, all these dips are really small on the daily, it needs to pull back bigger, but If you go out to a monthly chart, that's, in my opinion, that's the chart that's in play. Those are the upper targets before we get a bigger pullback, which on the Dow's 21,000. I know we're talking about the S&Ps. The next daily chart pattern is 2130 for the upper target. So I'm pretty confident that the lows we put in last week, you know, even if you just look at a daily chart, going back to the last pullback, there was, you know, three, and I'm not a big double bottom, triple bottom type trader, but I think those are just obvious levels. But when you look at a daily chart, basically this current pullback has the three higher lows, just like we did in the past, and everything is pointing up.
Cool. All right, Thomas, let's go to you. Based on any tactical or, what's your confidence on that? I'm sorry, 8.5. Okay, got it. Based on any tactical fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower this week? And that's close on Friday of April 10th. And once you give us your prediction, let us know on a scale of 0 to 10, with 0 being no confidence, in other words, a 50-50 chance, and 10 being extremely confident.
Yeah, you know, I'm not really one to predict on the longer time frame, so I'm going to take a stance. As I heard somebody say once before on your show, if you're going to hold a bazooka to my head, you know, it's obviously today it's nothing but a party to the buy side. We had Friday jobs data, which was horrible. You know, we were rallying today on the worst economic data since 2009. And that in conjunction with Mutual Fund Monday, it's the beginning of the month. There's a lot of cash to be put to work in the market, and they came in with guns blazing today. So couple that with the HFTs and the algos, we see a chance to just run buy stops today, and it's just been about buy stops getting hit on much higher time frames. Now, that being said, I see us coming into some longer time frame levels, and this is the way that I look at the market as far as predicting, quote unquote. You know, I look in terms of where's my next, if I'm looking to be a seller, if the market's rallying hard and they're hitting stops on higher time frames, where's the next logical exhaustion point of previous supply where I could look for exhaustion to come in? I'm seeing that right here at around 2078 up to 2084. They take those levels out, it could be an easy push right back up to 2100. That being said, where do I see the market being on Friday? I think we're going to come back down and visit these lows that were made on Friday morning. So I'm looking for weakness. It's hard to say, though, you know, on what day is that going to happen. But, you know, we could see continued strength here into the afternoon. I'd be kind of surprised if we tank today. So I'm looking for continued strength today, maybe a little bit more rotational activity tomorrow, and then maybe some weakness the next couple of days into the end of the week.
Oh, okay, cool. And then what's your confidence on that?
Again, since I hate to predict, I'm going to go pretty neutral with like a 5 or a 6.
Okay.
You know, for me, again, I'm adaptable to what's happening. If I'm looking at a level as supply and I'm thinking, hey, they really shouldn't take this level, I'm going to look for exhaustion here, maybe I even get short, and now they take the level out, well, then I have to adapt and change my reading. You know, and if they're hitting buy stops, they're hitting buy stops. I can't argue with that. I'll look to the buyer. You know, so.
You know, something I always learn something from these shows. It's kind of interesting. You reminded me of the fact that early in the month you have this buying that comes in.
Yeah.
And there's been a lot of mechanical testing on that, and it looks like it does test out. But it's kind of fascinating that we came in this morning and the futures were getting creamed. Do you think that? It seems like you'd be more in touch with this than most of us here. You think that was some manipulation coming in, squeeze things down a little bit?
Absolutely. I mean, it's manipulation every step of the way. You know, it was. But you know, that being said, I mean, listen, the algos, the HFTs, they went crazy on Friday. It's a thin market. It's a holiday. No one was there. It was easy for them to do what they did. But that's still pointing to some underlying weakness. If the market didn't have that underlying weakness, I don't think they could have been able to sell it off 30 or 40 points like they did.
Yeah.
So
gotcha.
I think, you know, now that they created what we call unfinished business by doing that, there's a lot of thin activity here today. Right off the get-go, something we look at on an intraday basis is breadth. And breadth was so strong. That's telling me the cash market was so strong this morning compared to where futures was negative on the day, and breadth was a positive 1,000. So that's just underlying strength. They come in and they hit that pocket of unfinished business from Friday. There's no supply there. It's very easy for them to go right up the zipper like they did. But now you're starting to get into those areas where buyers really have to prove themselves here. So.
Gotcha. Yeah, and that's kind of interesting. I'm not a big fan of volume. I had one take on volume, and I think it's Richard Orms. He wrote about like ease of movement, and sometimes when you see a market going up on light volume, it's just the opposite of what people think. It could actually be there's no supply out there, and they're bidding up to get the supply. So it's a fascinating game.
Yeah. Yeah.
I'm not sure if I don't remember if I introduced myself or not, which is probably why we're so far ahead of schedule today. But Dave Landry, DaveLandry.com. I believe you can only predict the short term when it comes to the markets, but you can stick with positions longer term. It's kind of akin to predicting the weather. If it's cloudy and thundering outside, you know it might rain soon, but you don't know if it's going to be raining this time next week or next year. And I have been around for a long time. I was a commodity trade advisor for about 15 years. I've been trading for 20-something years. And again, at DaveLandry.com. I have a 21-page report on my methodology. If you're interested, just go to my website and click on Store, and it's under Free Reports on the website. I will be adding some more free reports shortly to that. As far as market prediction, I'm a 100% technician. When I preach that you can only predict the short term when it comes to markets, occasionally a client or two will think that means that I can always predict the markets, and that's simply not true. If I see a market that's in a strong trend and has pulled back, I know there's a pretty good chance you're going to have a reversion to the mean move in the direction of the trend. In other words, a swing trade type of move. At least it's likely or possible. I don't know, again, if that trend's going to continue longer term, but I know there's a pretty good chance. The S&P 500 is going straight sideways on a net basis since last November. So the arrow is pointing sideways there, but if you back the chart out a little bit, I think as Sean was kind of alluding to, we have certainly been in a longer-term uptrend, and I think in markets, it's a good idea to err on the side of the longer-term trend. So I'm going to stay bullish for now. One thing that's kind of cool in the S&P is that we still have a positive slope in the 50-day moving average. That doesn't mean you should just trade a positive slope at a moving average, but it can help to keep you on the right side of the market. And with today's action, we're back above that 50-day moving average. We've bounced off the bottom of the short-term range around 2050. And I do think, Thomas kind of alluded to, and Sean, maybe Anka too, that I think there's a potential for us to test the top of this range around 2100. But I'm gonna go with bullish for now, and I'm just gonna stay bullish as long as the market doesn't come unglued. And then I'm gonna give that a 7. The only thing that's kind of interesting, and maybe I'll elaborate on this when we get to the next question, but since 2009, this has been a buy and hold kind of market. And traders have actually gotten punished. We've had some pretty serious sell-offs that I think were very tradable to the downside, but unfortunately the market would straight back up. And I think sooner or later buying on a dip is not going to work. And I'm a pullback guy, so that kind of scares me. But I'm not gonna complain. Like I said, I think in last week's show, my brother came up to me all excited because his 401k doubled since 2009. I'm just worried that might be the kiss of death. But hey, as a trend follower, I'm not going to try to outthink it. Anka, you're up next, and the question is, we'll have you elaborate a little bit on what you were saying earlier about developing events, and they can be technical or fundamental. Will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Well, the main event that I will be watching this week, like I've mentioned earlier, is the FOMC meeting minute that's going to come in on Wednesday at 2 p.m. Eastern. And then again, we get unemployment claims, and those are on Thursday at 8:30 a.m. And because I'm a swing trader, I'm not really worried about these numbers, but I do watch them carefully because they, especially the unemployment claims that come in at 8:30, that is pre-market, that's going to have an impact on the market open. So usually what I look at for my swing trading and of course my investment positions, I really don't micromanage, but for my swing trading, I look at where the market opens and what the tendency is and how they behave at these reports in order for me to apply some trailing stops for my current trades. And again, I look at the market and, even though I'm very bullish on the overall market because so far there has been a lot of symmetry and all the dips have been bought, but I'm very careful at these corrections that happen in the market as well, and I don't fear, so therefore because of my trailing methods, I really don't get out every time at the first time of reversal, but rather I live through the pullback and see how it behaves. So as a rule of thumb, I never get out on a red bar. are, so I'm not one of those traders that get easily scared out of the market. But overall, I'm looking for a continuation higher in the market. I do have in my portfolio right now, I have to say, only long positions that are going on. I did have one position that was kind of lagging a little bit, and that was Halliburton, but I can see that oil has kind of like double bottomed a little bit there. I'm not a big fan of double bottoms or double tops, but I tend to look at the pattern, and I love to see what other traders might be thinking at that point. So with this little pop in oil that we're getting, Halliburton is getting a good push higher, and I could see easily Halliburton going back up into the 49 area, maybe close to 50 area if this is going to continue, if oil is going to continue to pop a little bit. And there is a strong consolidation on oil right now, so if it should pop above that daily base that I've been watching, even the weekly base, and I'm a big fan of larger time frames because I think that larger time frames are basically the ones that are dictating what the other time frames are doing. And I love the pattern that we do have right now on oil. I'm taking a close look at some energy stocks for some potential swing trades for the following week. So this is pretty much what I'm watching. Healthcare, really strong sector. It's going to continue to perform probably well, even though there are some stocks that are really not offering pullbacks. And I have to say that I do not own any of these healthcare stocks, and I really need a pullback. And I was actually hoping for a steeper pullback and then for a continuation higher, that would probably offer me, an entry opportunity in, stocks like, Humana or AET or, anything like this.
Yeah, it's kind of hard to get on some of those. They're going straight up.
Absolutely.
+1 on those oil stocks, and then when it gets to my turn, maybe we'll talk about some of those. Before the show, we're talking about a lot of stocks, and that'd probably be a good question in and of itself. What stocks are you watching, and why? Sean, let's go to you next. What developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
I agree with everything Anka just said. I'm totally technical, so it's like there's a lot of stuff that could turn the markets, and it's either ISIS today or whatever tomorrow, and it's like if you try to follow the fundamental and make sense of it, a lot of times that'll get traders in trouble by building false beliefs. So if I think, oh well, it's because of oil or whatever, and then there's a report, and then the market moves, I can build a belief that, oh, I need to watch that all the time.
Yeah.
But the thing is, the news, even though they talk about the same stuff every day, they latch onto a story, and it seems like, well, that's what's making the market move. Oh, I figured it out, and I just need to learn more about ISIS because that'll help me, or whatever it is, and all of a sudden you're down this confusion. You've made it so confusing that no matter what technical indicators you're looking at, you're going to say, well, no, this time is totally different. And this is the high this time, and I'm going to explain why and blah, blah, blah. So it can get very dangerous with fundamentals, in my opinion.
Absolutely. I actually, it's like don't confuse issue with facts is one of my favorite sayings, and I actually bought the domains "don't confuse issues with facts" and "do not confuse the issues with facts." Anyway, I'm sorry, I cut you off. Keep going.
No, it's I forgot what I was going to say, but it's really easy to build beliefs, and if you can't, my rule is if I cannot duplicate it or repeat it, it's meaningless as far as trading.
Absolutely.
I look at it like the monthly chart is bullish, and that means I should continue to go long until the monthly chart target is hit. Kind of forgot what I was going to say, but yeah. So
I'm sorry about that.
No.
You were making good points, and I wanted to +1 in, so sorry about that.
I always forget what I'm going to say, so it's okay. The stocks I'm looking at, we went long DDD this morning. We've been long AA from last week. ADSK is setting up really good. We're long that. And Tesla came down and hit support last week. So those are some stocks I'm watching. But unless the S&Ps close below 2,000, I'm going to continue to keep buying. And I know that every pullback always feels like this is it, this is it. Most traders feel better short for some reason. I don't know why, but
that's crazy, isn't it? Yeah.
It's easier to do the opposite. Most traders do that too soon. So, what I was going to say is the market. If people think the market has to make sense, that's another downfall. The market doesn't make sense. It doesn't have to make sense. It doesn't have to be in reality. It's its own thing that most of the time it's not reality and it does not make sense. So so when you say, oh, the market's going up, it just doesn't make any sense, that's probably a true statement.
Yeah. On one of the shows a while back, we were talking about Tom McClellan's a quote from Tom McClellan about how, and I have to bring it up nearly every show, about when you buy a stock, you're forming a relationship between you and that company, and you expect the company to do certain things. But you're also forming a relationship with everybody else who's bought the company, and he said those people will screw you. So that was pretty good. So I told Tom I was using his quote a lot. He says, I got one better. He says, my mother, Marion, and I want to try to quote it as best I can, but she said that everyone uses timing in their trading. Some people buy when they have money. Some people sell when they need money, and others use more sophisticated methods. And that's what you're saying makes so much sense, Sean, because how could you make sense of that if people are just buying and selling based on these emotions?
Right. Yep, exactly.
All right, Thomas, let's go to you. No controversy yet this week. Everybody complains, not enough controversy on the show. So maybe you could disagree with us a little. I'm just kidding. What developing events, technical or fundamental, will you be watching out for this week?
Go ahead. I agree a lot with a lot of what Sean said. I mean, for the most part, I'm not concerned with fundamentals as far as being a day trader. I want to be aware of events. Obviously, you have to be. My feeling is that most fundamentals are priced in. You could be relatively sure that someone already knows about the information that's coming out when it comes to these economic reports. But then, every once in a while you get these bigger events, these bigger all-encompassing events, where I think we have a couple right now. They come along and they can really shake the markets up. They cloud the markets because things can kind of go either way. And right now we have two big ones. One is with the Fed, obviously. The Fed speak. Obviously, it's we're watching what the Fed does with the minutes this week. I think it's pretty unclear with rate hike timing right now. The Fed is kind of becoming handcuffed, especially when you have all this negative news coming out, like this report on Friday. And I think it's the same story. They want to raise rates. It seems like they talk about it, but then every time they start to talk about it, the market tanks a little bit, and then they start to back off. And it seems like the low rate's the only thing that really keeping this market going right now.
Yeah, so, I think they've painted themselves into a corner, and it seems like you've been around a while, and I think everybody here has been around for quite a while. It seems like many years ago they did what had to be done. They would come in and raise rates when they had to. They'd bump them down a little bit when they needed. And now it's kind of a free-for-all. I don't know what happened but it's like they decided that instead of watching inflation and doing things there and whatever else they were supposed to pay attention to, they became like, okay, well, what can we do to keep this market afloat?
Exactly.
Which is kind of scary. And I'm a big fan of bubbles. I think sooner or later, like all bubbles, it will end. But in the meantime, as a trend follower, like Sean pointed out to a second ago, let's not question it. Let's just follow along.
Absolutely.
Okay, you had any other thoughts on that before I?
Well, you just said that again they get handcuffed and you just have to see what they say and take it from there. There's no way to really predict it. Anything, especially when she gets on the mic yelling and she starts flapping her gums, anything can come out. And you see the HFTs and the algos reacting to everything she says. And a lot of times when they're speaking or numbers about to come out Fed related, or if a Fed number comes out, you just back off and kind of let it play out. Let other traders get trapped and then look to take advantage of it.
Yeah.
The other main thing now, which is kind of the same situation as the euro and Greece, I think these are the two main things right now, which can go either way. I mean, the euro is so overdone now. I'm long the euro longer term right now into these 105 area here. It's so overdone. I have targets way above where we are now, and it all is dependent right now on Greece, right, with default fears. And you have a big IMF loan payment coming later this week. You got the Greek finance minister yesterday on the wire saying he intends to meet all his obligations to all its creditors, but who knows? And everybody's saying, oh, the euro can't break up or it has to break up. Who knows which way it's going to go? But either way, it's going to have big consequences on everything else. So
yeah,
you got to be adaptable. You know, if you're long and it turns out Greece is going to default and they're going to leave, I mean, forget about it. The euro's going to tank. You can't do anything about it. You cover your longs and that's it. But those are the two main events that I'm looking at right now. The two main fundamental influencing, events right now.
gotcha. And as far as that intermarket technical analysis is concerned, as we said, as I often say on the show, it doesn't matter what the relationships are supposed to be. It only matters when it matters. So if the dollar begins to finally top out, and if that's what the market is concerned about, then you make darn sure you're paying attention to the dollar. But if the market ignores the dollar, well, you don't worry about it. But it's good to learn these relationships. But you just got to know when to pay attention to them and when just to let them.
Exactly, and like the Greece, the euro is way overdone to the downside. The dollar is way overdone to the upside. Gold's another one. There's very heavy short inventory in the gold. A lot of short interest. I don't really get too much involved in individual stocks, but if I was, I'd probably start to look at some of the gold mining company stocks, which have been battered. Yeah. I think there's a lot of short inventory. They could, if they start to come in and squeeze these shorts, could be lead to a nice pop out of this range that gold's been in for quite a while. So
they've been battered and fried.
Yep. Sure.
Okay, I'm a technical guy, and I mentioned back to because Thomas, you made me think about these going way back in time to some of these old school guys like Livermore and Schabacher and people like that. And Schabacher once said the fundamentals suggest what a stock ought to be doing, and the technicals are saying what a stock is doing. And by stock, I just mean a market, or it could be anything. It doesn't necessarily have to be a stock. So I'm keeping an eye on the technicals and only the technicals. S&P 500, 2000 is well watched. It's the bottom of the range. The 200-day moving average is just above that point. And I often make the joke about I don't use a whole lot of technicals, but I will occasionally plot that moving average in there or two. And it's kind of like the joke we used to make about it. It's like the thermos. It keeps the hot things hot and the cold things cold. How do it know? And it's these technicals often come about at the same point. And you got the 200-day moving average right around 2,000, which is the bottom of the S&P 500. So I definitely do want to keep an eye on that. If we break below that, not that it's going to be a line in the sand or a switch gets flipped or the belt is wrong or whatever, but you certainly want to pull in your horns a little bit and make sure you're honoring those stops. If we do get stopped out, as I often preach, he who fights and runs away lives to fight another day. We might actually start shorting if we get below 2,000 and start seeing some signals. So that's what I'm paying attention to in the S&P 500. The one good thing, and Anka mentioned it earlier, that she's long, and I have to agree with her, is the Russell 2000 has been looking pretty good in here. We had a little spill about a week or so ago, but for the most part, it's looking fantastic, and we're just off of all-time highs. And one thing that I've been writing about quite a bit in my daily column is the fact that I think it's going to be nearly impossible, flat out, to have a bear market as long as the Russell remains at or near new highs because it's such a broad-based index. One thing that I am kind of paying attention to is I do agree with Thomas about the metals. I think it's more of a process than an event with these commodities. Sometimes they could go down and bottom for quite a while. We took a stab at the golds, I think, a year and a half ago. We made a little money. We took another stab recently. It didn't do so well. And then I think maybe third time's the charm, but they're not quite set up yet, and that's where the patience thing comes in. Just sit back and be patient and wait for the setups to come along. We're also long. We're only long one at this moment, but Anka also talked about being long an energy stock. We're long TGA, TransGlobe Energy Corp, and that stock has bottomed out nicely and has been rallying nicely off the lows, and it triggered late last week on that. So I think the energies have a lot of potential in here. I'm not a big value guy, but I think they've been beaten up so much. I think the selling is done, and then again, I don't watch all these different things, but I would imagine there's still a lot of shorts that are probably hanging around from the prior trend there. Okay, Anka, let's go back to you for the final question. Who or what first inspired you to become a trader?
Well, I have been working in the financial industry for a very long time, and like I've mentioned at the very beginning, I do have an over a decade experience in investment banking, and this kind of like, being around hedge funds, being around hedge fund managers, institutional traders, this has really sunk into me to start my own trading business, and I did see the potential there. When I first started trading, I was more, like I've mentioned, a swing trader and also a position trader. And I think this comes with an advantage if you come from swing trading and position trading towards day trading, because you kind of like know more how the market reacts and know how to follow the trend better than if you would start as a day trader. So for me to transition to day trading, it was not such a difficult task. And even when I was, for quite some time a day trader, and occasionally I day trade now, but very occasionally when there are some really large price swings, and I have to admit that I did not trade, Qs or SPYs long today, or even futures long today, although it was a perfect trend day today. And even in my day trading, I love to, look for continuation of trends, and I focus more on medium time frames, such as the 5-minute chart or the 15-minute chart for my day trading. So, being around in investment banking and, kind of like opened the door for me. And of course, I had, great support, from my family doing this from home, because it does require a lot of time, a lot of focus, and you have to be, in your comfort zone, in your trading zone in order to do it. So I did find, a lot of support there.
Yeah, I agree. Okay, Sean, let's go to you next. Who or what inspired you to become a trader?
Yeah, I started so young. I read like the Series 7 book when I was like 16, and I don't really know why I was so interested. I mean, when I was really young, I used to, buy and sell, bikes and whatever, like when I was really young, and I always liked the whole trading, whatever it is, So I just kind of gravitated to like, oh, well, I could just do this without all the effort of, I could just buy and sell really quick. It's much easier than actually buying physical products. But when I first started trading, this was back before there was 10 million websites about trading, online, cheap commissions. When I first started trading, I was paying like $60 a round turn. I used to have to actually go to my broker's office, and I would sit there with him. I did that for about a year. So seeing that was probably what got me really motivated. There was one day when I was sitting in my broker's office, and he used to have all the order tickets all over his desk, and super sophisticated system. But and the broker was kind of a nervous guy, but he called the floor. He got off the phone. He was kind of shaking, and I said, "Oh, what happened?" And I don't know the customer's name or anything like that, but he goes, "Oh, that guy just made 500 grand." And I said, "Well, how long did it take him?" He said, 2 days. And I was probably 18 or 19 when I heard that, and that always stuck with me. Like, someone just made $500,000 in 2 days, But so that kind of got me going. And so there wasn't really one event. I think it was just like kind of a slow process, but back then there wasn't a whole lot of information, so it was a little bit slower of a learning process. Kind of, I think, actually helped me because I wasn't subjected to, a million different indicators and how they're all magical. And, for $97, you can beat the market. And I wasn't really subjected to that, so I knew going in it's a little bit more work than a lot of people that come into the markets today anticipate.
Yeah, absolutely. Okay, Tom, let's go over to you. What or who first inspired you to become a trader?
Oh man, I'm gonna age myself here.
Go ahead.
I'm gonna say maybe it sounds familiar, maybe not. Ken Roberts.
Oh my God, yes.
You know, buy options and become rich overnight, that
Yeah,
that type of deal. And, you know, again, we're talking about 94, 95 before the internet, or it was the internet, but you had to dial up an AOL, you know, and you
yeah.
call, you're online, someone picks up, and you yell, oh, you hang up, I'm online, you know. But it was about an ad that I saw in a magazine. Responded to the ad, got his pamphlet in the mail, and I become hooked on soybean options at the time. And there again, 95, 96, everybody, the rant was beans in the teens. You know, buy
Yeah.
soybean options and become rich overnight. Well, I fell for it. I didn't become rich overnight, but I fell for it, and I caught the bug, and from there it was just off to the races.
Yeah, I
Um,
remember all that.
yeah,
That's
you know,
I had a friend a little bit before that time, and he got a cold call from one of these guys, one of the guys on the broker side, and he ran like 5,000 into like $250,000 on bean options or something stupid like
yeah,
that. And the he said he was like the Judas goat. He got all his friends into it, and then
yep, yep,
they all imploded, and then he I probably shouldn't say this because it's something the cover would track him down, but he never got a W-2. He never got anything. There was like, I guess the operation was so shady, but somehow he got his buddy out of the deal. But
yeah.
yeah, crazy times. Yeah, I hear you on that.
Yeah, so you know, I ran around in circles for a while, but finally coming across order flow, and that's the way that I trade in the markets. Every
Cool.
decision I make is based on simple objective guidelines that quantify supply and demand, and all of our trades are based on the information coming from the order flow. And just define order flow. We're just talking about the real-time supply and demand coming in from all the real-time trades going off, the buyers and sellers. The flow of orders coming into the market, excuse me, that's what actually causes price to move. And since change in order flow precedes change in price, we're identifying clues in the order flow that actually show up ahead of price reversals, right? So,
Cool.
you know, when it comes down to trading in the markets, it's always going to be a business of incomplete information. You know, we're never going to see the other person's cards, but nothing gives us a degree of transparency that order flow does. And you know, it's a different perspective on what drives price, but on a very basic level, we simplify it down because it's logical. You know, we want to be aware of where the important supply and demand levels are above and below the markets. We're thinking in terms of who's in control, buyers or sellers, and when is that control shifting. You know, and I think by boiling it down into a few logical concepts, you're making things fairly simple based on the order flow information that the market's giving us. And I think one of the main issues for most traders is that people turn this process into a very complicated process, and it really doesn't have to be. You know, they make it complicated because they're looking for certainty, they're looking for perfection.
Yeah.
And they're never going to find it. But by doing that, what are you doing? You're adding more indicators. You're adding more gurus that you're listening to. You know, and you just adding to your collection. You're not building your knowledge, and that's where I think people need to do a more complete job of building their knowledge. You know, concentrate more on the process. You know, you have to think about what's truly driving price. And it's only then when you're going to start to ask yourself the right questions and get the right answers. That's what.
Yeah, Thomas. You know, you're not helping bring any controversy to the show this week. But, I agree with you. It's like
I base my trading on high tides. No, I'm just kidding.
Yeah, there. Well, we got asked by an astrologist to come on the show, and we're still debating that. But yeah, I do a webinar on occasion. I've done it for other people. I haven't done it for my own people, but it's out there on YouTube somewhere where I talk about a trader's journey where you start with a blank chart and you just keep adding all these indicators until you reach that analysis paralysis, and then before you know it, you start stripping them off. And when you get back to the beginning, it's when you reach a true enlightenment, which I think is some Far East quotes on that. But as far as me getting started longer term, kind of like Sean, I had a bit of a bug in me when I was younger. To those of you, if you can see the camera right now, I'm about this wide. But years ago, I wasn't, and I was a bit of a picky eater when I was a kid. Which is hard to believe for anyone who knows me, but I mean, because you can call me anything but late for lunch. But anyway, my nickname, believe it or not, in the cafeteria was the trader, because I'd be like, I'll give you $1 and my cornbread if you give me your chicken patty or whatever. And I was every day I'd get in there and do some trades. I also, in schoolyards, I would go up to kids. The word was out that if you brought me any coin 1964 or lower, I'd pay you twice what that coin was worth. And somebody got smart to me, because those are silver coins, obviously. Either they got smart to me or their parents got smart to me, and I probably ended up buying a few coin collections that way. So I was a silver trader early on. When I was a little bit older, I was pretty amazed that my silver collection was worth a small fortune. because of the Hunt Brothers bubble, and then of course that bubble pops, and that was my lesson in bubbles. But as far as adult life, I started trading mutual funds, and I guess I was just kind of investing in them, and I would plot every one of them by hand or through Excel, whatever, and I'd plot them on the wall of a spare room I had in an apartment. And that got kind of boring. It should be really quick, so I sold an old boat that I had for about $1,000. I bought a stock. It dropped about 1.5 points the first week. I thought I was crushed because I had 100 shares of it. I was down $150. I thought it was the end of the world. And then luckily it came back. I don't know if that was a good lesson or not, but within the coming weeks, I started trading options, and luckily that kind of worked out too. I did take a lot of big chances early on in my career, which could have easily not paid off, but they did, thank goodness. But yeah, I've had my ups and downs too, like I think everyone here has. As far as influence, early on or fairly early on, I was lucky enough to hook up with some guys that have been around for a while, such as Larry Connors, Jeff Cooper for back in the trading market days. Helped me out tremendously. In fact, I probably learned more about chart reading from him than anyone else. And then I was able to take what he taught me and just start looking at lots of charts. I look at about 2,000 charts a day, and I have been doing that for the last, I don't know, at least 15, maybe even 20 years. And that's just been a wonderful exercise for me. So early on, it helped. I wasn't sure whether I was doing the right thing or understood the markets, and that's where Larry had come in and just gave me kind of the vote of confidence that I understood what I was doing and I got it, and that was kind of neat. And then, like I said, with Jeff teaching me how to read the charts, that helped a lot. And then, they helped with emotions and all too, because like one day I remember I was like, I'm in a bad mood, I'm kind of depressed today. And I started off by listing things, and the first thing I said was some positions were going against me, and I think it was Jeff that said stop right there. So just that in and of itself is enough to bum you out. You got to be careful with your emotions and all. So that was it was good to have someone to kind of reassure you, and I think as Sean and I think everyone here said already, it doesn't hurt to have mentors like this to let you know that there will be losses. You won't, even the best trade in the world could still go wrong. And it's a game of emotions, and not everyone, no one knows exactly what a market will do, but we take our educated guesses, kind of like Thomas pointed out quite a bit. And so it's good to have guys like that around that can kind of let you know that we don't all have the answers. We do take educated guesses, and there will be losses. But longer term, by following a plan, and that is the secret, it is a secret, with a viable methodology, you'll do just fine. Okay, I kind of went off on a few tangents there, but basically some of those old school guys, like I said, like Connors and Cooper, earlier on in a career helped out quite a bit. And the other thing I would recommend anyone do is go in and read like Livermore and anything written at least 50 to 100 years ago. Start off there, and then move maybe into more modern classics. And then the other thing too is just realize that if you just pick one pattern and get good at it. And if you can't, if you're not good with just one pattern, you're not going to be good with 10 patterns. And it's so funny, people do just the opposite. I have a pattern called persistent pullbacks, and if anybody wants it, I'll be happy to give it to you. And I did a webinar not too long ago just on that. If you look on YouTube, you can find it. But I think if all you did was trade that one pattern, I think you'd be successful. I also think you'd sit on your hands a lot waiting for opportunities, and I think that's a secret too. All right, I think I've pontificated enough here. Let's go back to Anka. Anka, any closing thoughts, anything else you want to tell us about TradeOutLoud.com?
Okay, so I invite everybody that is new to trading or even more advanced in trading to visit our website. It is TradeOutLoud.com. We offer a wide array of trading education courses for stocks, forex futures as well, whether you want to learn how to day trade or swing trade or invest. We also have a product, it's called Active Investor Signal Program, where we actually carbon copy all our trades, basically all my trades that I take on a weekly basis, and you can expect 5 or more trades per week. You could just cherry pick or just take all of them. Our portfolio for last year was up 34%, and for 2013 actually was the best year that we've had for 38%. So we do have close to 80% accuracy rate, and if you want to give it a try, just shoot me an email or just again, sign up for a trial. We're offering a special pricing on that. Also, you can visit my website for a lot of free education that we host almost every week, and we also offer personal coaching and mentoring, and this is during live market hours. And I can also trade along with you live on live market conditions while I coach you. So, and I couldn't agree more with Dave here, and I know I have to take a step back from Trade Out Loud, but I couldn't agree more. One strategy is all you need to master in order to succeed, and apply that every single day in the market. And this is, I think, key. Simplify your charts and simplify the way you look at charts and the way, go back to the basic, and stay away from information overload. I mean, information is great, and I remember when I started trading, oh my gosh, there was not any available information about trading. There wasn't even a chat room available. So you guys are bombarded now with a lot of trading information, so make sure you know how to sort through it, and kind of like, take a step back and trade a little bit in the zone and try to find yourself as a trader.
Cool. I agree. All right, Sean, let's go to you. Sean Mckisson of 360wallst.com. Anything else you want to tell us about 360wallst.com, yourself, the markets, or whatever? It's up to you.
Well, I hate trying to do a sales pitch. I'm never good at it. But if anyone wants to follow along, really, we have so many email lists. The easiest way is just email me at info@360wallstreet.com. That's WALLST.com. And I can put you on the right list. But we are going to start up our live room in about 2 weeks. It's free, showing different systems for futures for day trading. But you can also follow us on our blog if you want stock and option picks. Right now, that's free. So yeah, at this point, we're just kind of doing different systems on the futures markets. They're all basically symmetry and duplication of patterns, really just focused on like the TF, NASDAQ, YM. Some of our members do a lot of crude, but for most people, NASDAQ and Russell is probably the best. But check out the site, and there will be a couple auto-traded services in the future, in the near future as well. So if you're interested in like auto trading, we can put you on that list as well.
Cool. Okay. Let's go over to you, Thomas. Anything else you want to tell us about your trading yourself or your website, orderflowedge.com?
Sure. You know what it comes down to, just developing an edge, and we can definitely help traders do that. But you got to go a step beyond that. And yeah, of course, you have to have an edge. You got to take advantage of opportunity when you have the odds in your favor. But don't try and apply your edge on every single ebb and flow that comes into the market. Understand the context, the surrounding conditions. Pay attention to those underlying conditions, and by doing that, it could save you a lot of money, or make you a lot of money if you consistently make an effort to put the clues and the puzzle pieces together and then listen to what the market's telling you. Know the context for the day, the environment, if you will. Great example today. A major piece of context that we pay attention to is whether or not the market's in higher time frame stop run mode. Like today, they were hitting buy stops on higher time frames. Most of the time, they're just hitting stops on smaller time frames, and they'll rotate back and forth. A lot of back and forth type of opportunity. Today, like on a day like today, you can see that they're indeed hitting those higher time frame stop runs. You want to position yourself to be aggressively looking to get in on pullbacks and not fade those new highs or lows. Where if on a day that we could see they aren't in stop run mode on higher time frames, they're more rotational, we can be more aggressive fading the edges. Look for your opportunity at the edges of the market for moves back into the range, or outside in, as we call it. But what it comes down to, if what we talked about here today, order flow and supply and demand, and stop runs and smart money, if that interests you, and understand that we just scraped the surface today, but if what we talked about here today resonates with you, we're going to be holding an open trade room tomorrow morning, Tuesday morning, and I'd like to invite everybody to join us. That'll give us the opportunity to go into things a little bit deeper for you to see us in action real time with live charts. We have a link at orderflowedge.com/open room, or you could just send an email to support@orderflowedge.com. Request the invite, and we'll get you on the list for tomorrow morning. Open trade room tomorrow morning.
Okay, cool stuff. Just to wrap things up, I'm Dave at DaveLandry.com. If you do go to my website, if you go to the store, I have a free 21-page report which explains, I would say, probably 90% of my methodology. The other 10% is just detail. Also have a lot of free education on my website under articles. I have a YouTube channel. If you go to youtube.com/C as in Charlie or C as in custom /Dave Landry, I have over 1,200 and counting YouTube videos there. I do a webinar every Thursday where I invite people to come in and ask a lot of questions. I lecture for up to about an hour, depends on questions and what's going on in the markets. Show where I'm finding opportunities, and then I field your questions on individual stocks and trading in general. And we have a lot of fun with the webinars. We don't take ourselves too seriously. If you go to the YouTube channel, you want to see a couple of those, you can see those. Just to follow up with me, if you're interested in, let's say, watching this show next week, if you're watching this on YouTube now, if you check my website, there's a countdown timer which you can register for next week's show here, and also that's where the webinar, they have a countdown for the webinar for every webinar, and they're usually every Thursday. I think that's it. Dave, back to you, David Kosmider. Thanks for having me as host once again, and thanks to Timing Research for having me here.
All right. Yeah, thanks, everyone. Good show. I just want to remind everyone who's watching to, if you want to download this report or any past report, just go to TimingResearch.com/reports. And sometime later in the week, before Sunday afternoon, be sure to go to TimingResearch.com/current survey to fill out the next survey. And I just want to thank my guests again. Thomas DeLello of orderflowedge.com. Thank you for being here first time. And Anka Metcalf of tradeoutloud.com. Thanks you too for being here first time. And Sean Mckisson of 360wallstreet.com. Thanks for being back. And of course, Dave Landry. Thanks for guest hosting again.
Thank you, and thanks to all you guys for being here too.
Thanks for having me. Pleasure to be here. Take care, everybody.
All right. Thanks, guys.
Thank you.